in this apartment list report, and if you want to pull it up, but
Oh yeah.
it shows the regions, and there were two things. The first thing that I wanted to distinguish was month over month versus year over year. Now we talked about that last week when there were so many mixed signal headlines about home price growth.
I enjoyed that.
The same, and you can kind of say the same thing a little bit about rent growth in 2023. Now, the story of month over month rent growth is a little bit lower than the historical averages, but still positive. The story of year over year, and the chart will show you, is a plunging down to flat. We're at zero rent growth. It's not that rents are zero. We're not giving away free rent, but it's not increasing in price. And that compares to it says May 2023. I don't know what the red and the blue numbers are here.
May 23. That's just monthly growth.
Oh, okay.
Right.
Oh, the top.
Inflation. Sorry, CPI top line inflation.
Yeah.
And the blue is rent of primary residence, and then the purple is the purple.
Oh yeah. Okay. So this is their. They are also saying that CPI rents are heading down finally, and they're going to start pulling things out. But the most dramatic line is they've huge peak of rent growth that was in 2022, and right now we are plunging down. We have plunged into zero, and may go in terms of year-over-year basis, may go in the negative.
But again, so you can look at this graph and say we have 0% rent growth right now.
Yeah,
but it's not necessarily the case.
Yeah, and that is also true if you scroll. So if you scroll down the month over month, they show positive rent growth for every month except for January of this year. Now, again, slightly lower than 2018 and 2019, which is the pre-pandemic years. But my final thing, so we've got the difference between year over year, month over month. My thing is regional variation. It is readily apparent that the story of this year, 2023 rent growth, is the popular Sunbelt markets are cooling off and taking the whole nation's average with it. And what did they say? That 73 of the nation's 100 cities have rents that are decreasing. A lot of those, among those 73, are not a lot of Midwestern markets.
Yeah.
And so,
why don't they have their interactive? They usually have their Tableau interactive maps. What's going on?
We'll have to talk to Ivan about it.
Yeah. Or what's?
I don't know. That is it's a little disappointing. I'll have to see what maybe there's some kind of flash.
Usually they have really nice Tableau powered interactive charts where I get to hover on these cities and it would tell me exactly the rent growth.
It's just an image this time, but they did provide a little bit of extra charts this month with the comparison to CPI.
That's great. Look at this though. The Sun Belt, which has been the darling and has been the kind of the consensus play, Matt, is having rent declines across the board,
except
for
Miami,
except for South Florida. South Florida. It's like the Midwest and the South Florida is just keep chugging along.
One thing that kind of unites them is, well, first of all, is supply. The markets that it's almost like after 2022. Markets suddenly became a lot more vulnerable, or began to be more vulnerable to supply influx. But all these popular Sunbelt got dumped with new supply.
Yeah.
So that's one thing that is triggering this cool down in the formerly popular markets. The second thing is, I think cost of living is a huge thing.
Yeah.
Midwestern markets are low cost of living, and on a relative basis, there's a lot of Miami that has lower cost of living than you would think.
Yeah.
So that I think that those are two factors that you'll probably see Midwestern rents coming up a little bit slower on, it's not going to be perfect. They're not going to come up all the way to the Sunbelt rents. But they are,
my concern, man, is it's going to be tough to buy maybe in the Midwest, and we'll see as more deals come on the market. But if the competition picks up and those cap rates compress, there may be a kind of a brief opportunity to get in the Midwest, and we may even start looking more Sunbelt markets if folks are not as active in some of those markets. But it really emphasizes that you can't overly simplify any narrative or investment thesis.
Yeah.
And I'm talking about investing in the Sun Belt with the idea that, that's where most of the migration is coming. People are moving down there.
And they are.
And They are.
Yeah.
And again, over the long term, that supply will be absorbed. I think a lot of it actually is being absorbed.
Mm-hmm.
But and it goes to show that you can be right on one thing, but still the timing is hard to figure out, and you can be wrong in the short term. You could have said, I'm going to invest in Houston or Atlanta or Memphis or Charlotte or any of these markets, in Las Vegas, and we're going to do a deep value add.
Mm-hmm.
And it's a good market for the next 10 years. And over the next 50 years, it's going to be a great market. It's going to have great growth. But you picked the 2 years where it didn't work. And the musical chairs, the music stopped.
And that's, and I think that's why it's no coincidence that the dramatic stories about loan maturities that we're seeing are coming up in Sunbelt markets.
Yeah.
Markets that have had at all at once, rising expenses, all at once, new supply, all at once. Here comes the higher loan, higher costs for lending, and thank goodness that some people are kind of realizing soon now. I think it's going to hit people too late though for many.
Too many people took the get rich quick approach versus the get rich for sure over a period of time.
Yeah. And so even just a little bit further into the apartment list is, they talk about nation's largest cities with negative rent growth. I'm really more interested in their ranking of markets that they have, the fastest winners and fastest losers. The slowest metro level rent growth are some of these popular. Salt Lake City, not necessarily Sunbelt, but it definitely was one of those kind of destination remote working paradises. You can go for a hike, go take in the nice aspen trees. And Austin too had one of the largest influx of supply, and it was also one of those, Phoenix, Portland, and over the last 12 months, New Orleans, Vegas, Phoenix, Austin, Sacramento. These are sunny places, and they're not seeing
But Matt, again, even on the on the 3 year, there's a couple Midwest options. I mean, Minneapolis, which has had a lot of its own unique issues, but in general on this list, I'm really only seeing, Midwest, Milwaukee.
19% over 3 years is pretty nice, though.
Yeah, I was going to say that's 19% over the last 3 years.
Yeah.
I keep thinking back to this one individual I met, Matt, and this was in 2019. It's in California. I was in Napa Valley at an investment conference, and they were a multifamily shop, and we were talking, and I was telling them basically how the Midwest was mispriced and a good opportunity, and their entire thesis was basically that the center of the country was basically going to just continue to be hollowed out, continue to rust out, because why would anyone be there?
Yeah,
and just everyone would just keep moving to the coasts and Silicon Valley.
Yeah,
and so they were just going to be building in those markets.
I don't agree.
And he was like, that's our entire thesis. And I'm like, man, I could not have embodied a more sense of coastal elitism and arrogance.
Yeah.
And it's I'm not even getting an argument with you friend, because you're going down that road. You've gone down that road.
Yeah.
But I think about him a lot.
Yeah. Well, you know what? If they did all pour to make things awful crowded. And I think about crowded national parks and stuff.
Yeah.
And people like crowds, and people like space. Guess what? There's a lot of space.
Yeah.
In the Midwest. There's reasons beyond, I think, even beyond the fact that lower cost of living, I think you get a little more space. Mm-hmm. And that's something that's happened in the remote work world is people want more space, whether it's apartment square footage or even, dare I say, a yard.
Yeah.
I don't think is as accessible in the East Coast.
Well, it can be just how much you want to pay for it, especially out west, on the West Coast. And again, so we're not, this is not over a short, because people say, well, the Midwest, it's just kind of steady Eddie. You don't see really any growth, but now everything has dropped down, so they look like they're strong.
Mm-hmm.
Over the last 3 years, San Francisco is the worst. Minneapolis is second. But again, Minneapolis has had a lot of its own issues that really aren't related to anything other than Minneapolis.
Mm-hmm.
Then it's San Jose, so to California, which is, they're not too far away. Washington, I guess that's DC, New Orleans, Seattle, Pittsburgh, Houston, Portland. Man, I'm seeing a lot of coastal.
Yep.
I'm seeing a lot of coast. There's 2 in the Midwest.
Yep.
Now, fastest rent growth. Let's look at this, going the other direction. Now, over the past just over the last couple of years, it's a good mix. There's some coastal, there's some Sunbelt. Grand Rapids is in there. I guess that's the only Midwest. Now, over the last 12 months, Indianapolis is in the list. Kansas City, Chicago, Cincinnati, St. Louis. The last year, Matt, this is almost all Midwest, albeit, a New York, a Boston, and Tucson.
Yeah.
Tucson's crushing it.
Yeah. If we're looking over either the past 6 months or the past 12 months, there is nary a Sunbelt.
Yeah, there are. Yeah, I was gonna say. Raleigh. San Diego is
the farthest
Sunbelt.
The farthest south that you
Orlando. Get. Tampa. It's got all these past 3 years. Yeah, for the last 12 months. Yeah, there's not a one.
Now Pittsburgh, maybe Louisville. Louisville's the farthest south that you get.
Yeah, it doesn't count. In our backyard. She's ours.
Claimed. No, I think the Kentucky's a part of the Midwest.
It's not part of the South.
It's not. Yeah, you cross into
Tennessee. Mason did. So, Mason
there you go.
Line is a straight line.
We're claiming that first.
Yeah,
Kentucky. Mm-hmm. Anyways, I do think that is because a lot of the rent growth story of 2020, later 2022 and 2023 is tied up in the strong supply. That's why. Oh, there's our chart. Oh, well.
Sorry, I need to share my screen. Yeah, they do have their fancy graph down here.
Yeah, but anyways, all that regionality is supply is a regional thing, and what it kind of suggests, I think, is that there are strong fundamentals behind it. Not everything's sinking uniformly, and because you can at least nominally draw cause and effect on. Okay, this got a lot of apartments. There's a little bit more vacancy here. It suggests, I think, that it's not quite so dismal. You just have to figure out which markets are going to get a lot of apartments, or which markets have a longer term vision that aligns with what you have, maybe a 5-year plan. So if you're looking beyond that, then I think you're fine. Like what you said earlier.
Yeah, you have to have the full picture, and if you just look at demand, you're only looking at half of it.
Mm-hmm.
It's what that balance is, and then what no one can predict the future. And real estate is hyperlocal. We talk about things at a national level because there are national trends that happen that are correlated, but then there's also local trends and local stories that can, supersede and interact in different ways. And it's best to be an expert in your markets and to find the things that don't show up in the data, because that's the other thing is the data, while we try to get granular, it's an incomplete, we're looking at digital pictures.
Yeah.
And to get the true analog, you have to aggregate and consolidate and you got to use your brain.
Yeah.
And physically be there most of the time.
Yep.
So you always keep that in mind. Just real estate is always so hyper local. But we try to correlate and see what trends and I find it amazing. What I do a lot, I'll see here national report and I'll see if it's picking up, and I'll look at our data.
Mm-hmm.
Then I talk to other apartment owners and to see if they're seeing similar things. And sometimes with the opposite, I see things that are going on in our portfolio, and then I ask different owners if they're seeing similar things, and then does it correspond with the data? And a lot of times it does, especially in demand. It's like, man, we had a really slow couple of weeks. Then all of a sudden it's like national, demand is slowed down. Or like, man, we're crushing it.
Yeah.
You're reading articles, it's like, it's slow. But like, man, we're crushing it. And then an article comes out, things have picked up.
Yeah.
And so, they're anecdotes you can't weight too heavily on, but it is amazing some of the national regional trends that do exist and that correlate. And sometimes they go the opposite direction.
Yeah.
When Indy was still growing but the rest of the country was declining.
Mm-hmm. Heck, if logistics is picking up, maybe there's a sub-market that'll benefit from it.
Exactly.